Hi everyone, this is Ali Hussein Kasim of Ali Talks Tech. We are back with our weekly schedule roundups. Last week was Africa Tech Policy Week, and I was fully involved with that. So in this week's roundup, I have a couple of interesting stories to speak about. The first one is a global digital banking ranking that was done by the banker, and I've done a bit of an analysis on it. You can find my analysis and an infographic on my LinkedIn page. But basically, the story is about who's winning, who's emerging, and who's missing. Then we look at at Africa's fintech opportunity, and today I'm focusing on cross-border payments. And this was sort of triggered by an interesting white paper that was done by a fintech based out of India called DigiPay. Quite an interesting piece of white paper. And again, you can find it on my LinkedIn page. The next one is an interesting one around MTN's Bank Tech, which disbursed a record $592 million in the first quarter of this year's financial year. So basically, this is an interesting one because we are continuing to see the cementing of the fin-telco conversation across Africa. Then we'll look at Microsoft's AI-driven layoffs. This is super interesting. Microsoft has cut 6,000 people, one of their largest cuts in history. And here's the kicker. One of the persons affected by the layoffs, wait for it, Microsoft's director of AI. My last story to cover today is the startup funding trends and why the big four of African fintech or African tech continue to generate the most funding in Africa. And when we're talking about the big four in tech in Africa, you're talking about Kenya, my home country, Nigeria, South Africa, and Egypt. So we are going to start seeing how that will affect this ecosystem. So, Africa's big four, why do they still hold the lion's share of tech funding? We'll come to that. Now, the Global Digital Banking report by the banker is quite an interesting report, and I was able to glean out some interesting insights. And my conversation is around who's winning, who's emerging, and who is missing in this important ranking of neobanks or digital banks across the world. So, breaking it down to regions, North America, Europe, Asia, Latin America, Middle East, and Africa. So, in this ranking, Africa is completely missing out. But you know what, guys? I have decided to still report on what is going on in Africa as far as digital banking or neobanking is concerned. So let's start with North America, which is a profit powerhouse. It's a global, North America controls about 58% of all neobank profits globally. It's dominated by a few large profitable neobanks. Ali Bank, nothing to do with me, leads with $196 billion in assets and $1 billion in pre-tax profits. Synchrony Bank follows closely with $110 billion in assets and a $2.6 billion profit. Sophie Bank is the fastest growing neobank in North America, with assets up 163.8%. they're not all success stories. Varo Bank saw an 85% drop in assets and $105 million in loss. North America digital banks, again, they generate close to 59% of global sector profits. It's underlying the strength of scale and financial sustainability. So here's the thing. These may be fintechs or there may be banks that have evolved into neobanks, but the underlying fundamentals of financial services remain the same. If you know my conversations around this sector, I keep on reminding ourselves in the fintech ecosystem, don't forget the fin in fintech. Let's look at Europe now. Competitive and super growing. It's a very dynamic market. It's driven by VC funding and user growth. Revolut boasts 50 million plus users and rapidly growing globally. They have announced a potential entry into Africa through South Africa, and your guess is as good as mine how soon this bank will move across the Pan-African ecosystem. Profitability is improving, though still behind North America. What is driving Europe's neobank growth? Two key things. They are all sort of cemented around policy and regulatory frameworks and partnerships. PSD2, which is the open banking, open finance framework across Europe, has been instrumental in opening up this ecosystem. And it's been followed closely because of the ability of partners to operate and partner easily because of the policy frameworks put in place. Fintech and bank partnerships have grown and they are fueling immense innovation. That's a lesson for the rest of the world. Let's look at Asia. Innovation and scale. China leads in users and innovation with WeBank serving 100 million plus users and holding 75 billion in assets, followed closely by Singapore and South Korea, which are seeing fast growth with agile digital banks like Trust Bank in Singapore. In India, digital banking is tied to traditional giants. The SBI's Yono up with 74 million users, which is still a very small market considering India's billion plus people. Same with China. You're talking about 1.3 billion people, and the neobanks, the large neobanks are controlling less than 200 million, have less than 200 million customers. In Latin America, inclusivity and profitability is becoming key, but one brand stands out among everybody else, and that's Nubank of Brazil, which has 100 million plus users. It is profitable and it is driving massive financial inclusion in the region. In the Middle East, innovation is state-driven and expansion is state-driven too. Rapid digital banking, particularly in UAE, and Saudi Arabia, fueled by state-backed innovation and established financial institutions. One brand stands out, Weo Bank in Abu Dhabi. So why is Africa missing? But as far as we are concerned, super innovating. So why conspicuously is Africa absent from this global ranking? Not even a mention of a vibrant digital banking and fintech ecosystem. South Africa leads with TimeBank, 10 million plus customers, now profitable, and Capitec, which is both driving digital transformation. Old Mutual South Africa has announced the entry of OM Bank, which is a fully digital bank aiming to disrupt this sector much further. Mobile money platforms like MTN, M-Pesa, MTN Momo, Airtel Money, Orange, and others are providing critical financial access across the continent. In Nigeria, firms like Fair Money and MoneyPoint Group are redefining neobanking by blending lending, payments, and digital accounts. This is reflecting Africa's distinct path to financial growth and inclusion. So key questions to ask. Why are African innovators missing from global recognition? What lessons can other regions learn from leaders and from those left out? How can we spark more inclusive global conversations on digital banking? Super interesting. This is an area that we continue to review as we move along. Now, I want to look at cross-border remittances. Cross-border remittances are becoming a very clear and present opportunity across Africa. Still held back by currency issues, but we are increasingly starting to see integration between mobile money players, integration between stablecoin players and mobile money players and local banks. So I believe this is an area ripe for growth and ripe for opportunity. We as Africans trade much less with each other than we trade with the rest of Africa, with the rest of the world. This is something that must change. And the fintech ecosystem is playing a crucial role in this space. Some of the things I would love to see from African fintechs is more cross-border partnerships. We are seeing that is already happening, but let's push it further. Lower fees and forex costs. Come on, guys. I mean, if we increase the volumes, the lower fees will pan out through volume and profitability. Let's broaden access with mobile money and offline options, and let's promote financial literacy. Now, I want to speak to MTN's Bank Tech, which has recorded a bumper harvest of $592 million disbursed in Q1 in form of loans. This is cementing the fin-telco conversation across Africa when it comes to fintech. How does this work? What MTN has done is quite interesting, actually. They are using a banking as a service model with open APIs. They are enabling fintechs and businesses to embed lending, savings, and insurance into their products. Super, super interesting. We're starting to see MTN starting to create an ecosystem effect using mobile money as a foundational platform and then growing it out into a banking as a service opportunity. The key focus right now is Ghana, Uganda, and Cameroon. In Nigeria, direct lending is restricted, so MTN is using Extra Time, which is an airtime advances platform, to drive that lending. How is MTN compared to M-Pesa? So MTN Bank Tech, open platforms, open APIs, fintechs. M-Pesa is also doing that. But as far as lending is concerned, M-Pesa has two key partners in Kenya. And that's two major banks, NCBA and KCB Bank Group. So we are talking about deep bank partnerships with M-Pesa. With MTN, we are talking about API-driven, modular, and rapidly scaling across West Africa and Central Africa. There's also another difference. Regulatory flexibility in Kenya has enabled faster growth for M-Pesa. For example, MTN is enabled to do this in Nigeria because of the restrictions under their payment service bank licenses from the Central Bank of Nigeria. Obviously, we have to look at key risks. We are talking about over-indebtedness, data privacy issues, regulatory constraints. I've mentioned about Nigeria's PSB rules. The key takeaway here for me is MTN and Safaricom are now Africa's most influential fin telcos, or telco fins, whichever way you want to look at it, bridging a $782 billion credit gap. For startups, partnering with telcos is the fastest route to scale and to impact. Super interesting. The future of African fintech is mobile money led, That's an open-ended question. We'll continue to explore that conversation. My last story today is about Microsoft's AI-driven layoffs. 6,000 jobs cut, including an AI director. Is this a cautionary tale for tech talent and automation? In fact, I've just seen somebody post breakdown of the talent that has been affected in the Microsoft, and the bigger majority, 28% or so, is from software engineers who have been cut because of this AI-driven Microsoft layoff, which brings me to the issue that Microsoft CEO has said 30% of all their coding is now done by AI platforms. Guys, let me repeat this. 30% of software development in Microsoft is now done by AI platforms. And that's very close to what Google CEO announced a couple of months ago when he said 25% of software development work is now done by AI platforms. What next, guys? What next? Yeah. What's really happening? We are talking about a company, a global tech company that is restructuring around artificial intelligence, anticipating it will soon handle the majority of software development through AI. CEO Satya Nadella says AI is already writing 30% of code on some projects. CTO Kevin Scott projects this to go up to 95% by 2030. That's not too far away. That's 5 years from now. So automation, not just code cutting, is driving this conversation. Question: layoffs by algorithms, including the AI director? Tongue-in-cheek, has the AI just eliminated its competition? This is just a question. The takeaway: Microsoft is a wake-up call. This sort of humongous AI-driven layoffs is a wake-up call for everybody. For Africa, potential opportunities for efficiency, innovation, and new business models, but risks in job displacement, ethical challenges, and a need for serious upskilling. Investment in AI literacy and oversight is going to be super crucial going forward. Building ethical, inclusive frameworks, ensuring AI augments, not replace people. I'm not so sure about that. Guys, this is the reality. It isn't just a Microsoft story. It's a preview of what's next for global tech talent. Are we ready in Africa? My last story is on why the Big Four in Africa still dominate funding, in tech funding. We can speak around 4 key issues: scale, in the sense of Nigeria and Egypt, for example; ecosystem maturity, in the sense of Kenya; pro-fintech policy, Kenya again; fintech first, and I think in Kenya we spend a lot of time bashing M-Pesa, but we also need to appreciate and understand that the core fintech ecosystem was actually built on top of M-Pesa. It's probably evolving now, it's starting to evolve, but for years, that M-Pesa ecosystem, the Daraja platform, has built a lot of fintechs. So we are starting to see some signals for change, of course. Togo has cracked the top 5, powered by Gozem's 30 million Series B. Rwanda, Ghana, Senegal are rising with bold policy moves. For example, Rwanda and Ghana announced a few weeks ago fintech license passporting. So if you are in Ghana and you are in Nigeria, you are in Rwanda, passporting your licensing between these two countries is going to be super easy. Mid-size rounds are in, mega deals are out, investors want traction, not just pitch decks. Fintech still leads, however, health tech, AI, energy, and logistics are gaining traction. What's the lesson for founders? In the Big Four, the bar is much higher, guys. The expectation is not just about product market fit, it's about strong teams, it's about path to profitability. Please repeat after me. Path to profitability. In emerging markets, focus on local proof points, leverage diaspora capital, and play to your unique sector edge. For policymakers, the playbook is clear. Innovation-friendly regulation, gentlemen and gentlewomen. Digital infrastructure, founder-first ecosystem. So the next tech hubs will be built, not inherited. The Big Four may lead today, but Africa's startup map is redrawing itself. One startup, one smart policy, and one local win at a time. And that's it for this week. Ladies and gentlemen, looking forward to speaking with you again next week. Asanteni sana.